Hey everybody, Brian Shannon here from alphatrends.net. Today's Saturday, the 18th of April, 2015. Let's look at this market. We had a pretty good sell-off on Friday, and that did drag us lower for the week as well. The S&P 500 down 1%, Nasdaq 1.6%, Russell 2000 made an all-time high this week, but was down 1% for the week, and semiconductors lost another 1.5%. Oil was the big winner. We'll take a look at that, and bonds also had a good week as well. So let's take a look at the charts here. The S&P 500 on the daily time frame, when we look at this, we're seeing a market that doesn't look like it's in trouble. We've seen that we've had trouble in this general area, and that we're kind of tightening the range a little bit. We've got this trend line that was broken. It tried to hold that, but couldn't breach this prior high right here. So we're kind of just back into the range. We've got a rising 50-day moving average, and we've got support down in this level, down the bottom end of the range, that is down near about 204.25 to 204.50. And when we look at a intraday time frame here, we're looking at 65-minute candles, and I've got a 5, 10, and 20-day moving average. You can see we are below that 5-day moving average, and what we've really got here is kind of just a big mess. This is kind of the middle of the range where we are right now, that we've kind of been in this area. So going into next week, it's possible that we could continue to sell off down, perhaps towards the low end of the range, and we're looking at 30-minute time frame right now, just for a little bit better clarity. You can see that the range that we've had, we're again right in the midpoint of that range. Basically, this is a 50% retracement of it, and that going down to a 10-minute time frame, this is what I was hoping would become support on this pullback. Instead, you can see that we're below that, and if we continue lower from here, this is going to be our intermediate term level of resistance that we're going to need to clear to get more neutral. So right now on the intermediate term, we are in a negative environment on the intermediate term. On the longer term time frame, we're kind of range bound. So we continue to have a lot of mixed messages from this market, and I think that again, next week, if we see this area continue to act as resistance and we stay below the declining 5-day moving average, it seems like it should continue to sell off, perhaps down towards the bottom end of the range. Now, we are, of course, in the middle of earnings season, and things are going to be very specific to the stock. You can see, for instance, Netflix, that ran in front of the earnings report and then gapped up huge and has continued to run over the last couple days. So anyone who thought, hey, it's up too much, I'm going to sell it short, as it opened at $5.31, is now out $40. So trade each stock based on its own merits. Be aware of the opportunities on the individual stocks, and be aware also, of course, of the market backdrop that we have here, especially now that we have individual catalysts for each individual company. The Nasdaq, you can see we've still got this trend line up here that has been acting as resistance, and we're seeing that range tighten in here. Our bigger level of support is really down close to basically 103.75 to 104.25-ish is really the bigger band of support that we want to see continue to hold if we see further selling this week. And basically these markets have been going nowhere the last month or so, 2 months actually. When we look at a 30-minute time frame here, you can see again, this is the level that we were thinking might offer support, because it has been a pivotal level. You can see it was resistance here, and then once again that acted resistance, and then briefly as support last week, but then of course it gapped down just to that level and continued lower. So now we're going to be looking at this as, if we start to see a rally early in the week, that it's likely that this area, basically this level right in here, 106.75 to 107, that this is likely to become resistance, and then we'll see if this market does in fact continue to drop down towards that bigger level of what's been support. We can take a look at this trend line here and see that that's been broken, but again, trend line breaks don't mean a market will reverse. It only means that the rate of ascent has slowed, and we have indecision here which again is the message of the market that is telling us that we have to take each stock based on its own merits and not have too much exposure to the market overall. The Russell 2000 this week, again, this one, this market broke out to another new all-time high and held there on Wednesday, closing high, and Thursday once again. But of course, on Friday we saw that gap lower, and now in the Russell 2000 we saw the gap lower. It is below the declining 5-day moving average, so intermediate term, we broke the trend line. We're below a declining 5-day moving average, and this is, unless it's going to take at least back above 125 to 125 and a quarter for the intermediate term trend to become neutral. Right now, the intermediate term trend is negative, so neutral above 125 and a quarter, and probably going to have to be back above 126 for positive for the intermediate term time frame. It looks likely that we'll get a test of this 50-day moving average down near about 123 and a quarter, and that's a potential level of support. It's not a reason to purchase by any means. It's a level that we want to be aware of, and we know that 50-day moving averages often act as support. If you take a look at Apple, for instance, we've seen that over the last 3 weeks that 50-day moving average has been magnetic for this stock, that it found the buyers there. However, when we look at a 30-minute time frame, this is the level we were looking for it to breach for an upside, and we don't buy those gaps higher, because what we do instead is we wait for them to pull back, find support, and then buy strength, which of course didn't occur. So in shares of Apple, we saw that resistance, once we gapped up to that level, it was met with sellers. The 5-day moving average turned sideways, and actually on a Thursday evening video for Alpha Trend subscribers, I was talking about it as a short below this level right in here. So you can see that, on the intermediate term trend right now in Apple, it's guilty till proven innocent. It's going to need to get back above 126 and a quarter and hold above there for it to become intermediate term neutral. For it to become positive, it's going to need to get back above this band of resistance. So I don't see any compelling reason to buy Apple right now. Let's go back to the markets. Again, we just covered the Russell 2000. The semiconductors, this group is just a mess. There's really not any advantage to being involved in here. That's kind of been my message in this market, that it's just kind of consolidating, trying to find some support. We do have lower highs in here, but we've got a market that's kind of turning sideways and trying to establish support here. So I think that the semiconductors are basically just in a void. The financial market, this group has been neutral, and you can see here that let's take a look at a 65-minute time frame, because that shows us right here was basically the midpoint of our range, and what we were looking for this week was, it was encouraging that it was getting back above the midpoint of the range and looked like it was going to make a run for the top end of that range, which it tried to do. But of course, Friday's gap lower thwarted that attempt, and now we're back to really more of a neutral look on the intermediate term time frame. So there's just really no advantage to the financials in here. We've got this bigger range, 2380 to 2390 is support, and the resistance has really been 2460 to 2470. So there's really nothing going on in the financials that tells us we need to do anything. It's going to need to break this bigger range in order for any real trending activity to occur. So you're better off on the shorter term time frames if you choose to engage yourself in the financial stocks. Now, the Biotechs, as we know, have been the real winners here, and this week we saw the Biotechs lose only 0.25%. So still outperforming on a relative basis, and for the year they're up 17.5%, only losing 0.25%. So people aren't rushing to sell those biotechs. We've got a rising 10, 20, and 50-day moving average. We saw the 50-day moving average hold as support, and on an intermediate term time frame, we do see, however, that the market had gotten over here, was guilty till proven innocent. It then made a higher high above a flat to rising 5-day moving average right here. It continued to make those higher highs and higher lows until Friday. It broke this little area of support at the 5-day moving average near 359, 360. So it's going to need to get back above 359, 360 for the intermediate term to turn back to neutral, because otherwise we look at it right now with a declining 5-day moving average as guilty till proven innocent. And if we continue to pull back, it doesn't seem unreasonable that this market could make it down maybe towards 345, 340 even. But it's not going to do damage to the major uptrend that this market is in. Right? For now, it's foolish to try to call a top. I can't tell you how many times we've seen people try to say, hey, that's the top. We simply don't know till well after the fact. We're just looking at this for now as a pullback within a primary uptrend. The U.S. dollar index, the UUP, is continuing to hold up here. The bigger band of support really right down in here. You could say it's maybe neutral in this area, but the longer term trend remains higher. Bonds still kind of in that neutral band that we discussed last week. Not a whole lot going in there. They're digesting after this pullback, and for now, we're going to continue to give the benefit of the doubt to the buyers in the bonds as long as we remain above this 129 and a quarter level. As for other markets, let's take a look at, so we spoke about Netflix. Let's talk about Amazon, for instance. Amazon has earnings due out this week, and it looks like it's building this nice little launching pad right here, and it looked like it wanted to break out this week, but again, Friday's action helped to make sure that didn't happen, not yet at least. And now Amazon has pulled back pretty deep on Friday. It's into this prior band of resistance in here, and it's just looking like there's no real advantage to be involved in Amazon. And with earnings coming due, it's really a crapshoot. If they have good earnings, then you could see this stock gap up 40, 50 points and continue to run the way Netflix did. If they have bad earnings, maybe it fills this gap. I'm simply not a gambler. I'm not willing to make a bet on that. So I'm going to suggest that sitting on the sidelines in a stock like that is probably what remains best. Alibaba is another example. Again, it's a piece of garbage. People think it's funny when I say that, but as far as the stock goes, it truly is. If you look at, for instance, the volume weighted average price since the stock came public, it's way up here at 97 bucks a share. The average price that this stock has traded hands at is $97. There's not a lot of people who are feeling good about owning this stock unless you owned it prior to the IPO. They're the only people making money. Wall Street duped the rest of America as far as, hey, buy this stock, it's a good one, buy and hold it. Maybe eventually that's true, but if you own it anywhere north of where you are, you've got to feel like you've been lied to a little bit. And again, it's the Wall Street marketing machine. You have to learn to recognize what's a good stock versus what's a good company. It was a good stock over here for a while, but then we started seeing the pattern of lower highs and lower lows, and if they don't scare you out, they'll wear you out. And again, I saw people getting excited about the stock again the last week and a half because it was above that 50-day moving average, but the direction of the 50-day moving average is more important, and we expect the rallies with a declining 50-day moving average to fail. It doesn't mean they all will, but it's what's most likely. And when we look at the 30-minute time frame, it gapped up, it ran a little bit, but then on Friday it just revealed itself once again as something to buy if you need to write off some capital gains so far. Eventually, maybe it goes to $1,000 a share. Who knows? But wait for it to stop going down. Wait for it to stabilize and then start to make higher highs and higher lows before you get involved in it. It's simply foolish to buy a stock like this in a downtrend. There are trade opportunities, of course, and that's not what I'm talking about. There are trade opportunities in there, but again, even with trades, long side trades, it's much easier to go in a stock in an uptrend. So let's take a look at oil as well, because oil is kind of doing what we've been talking about. We'd seen that we had a declining 50-day moving average. The rally attempt over here failed at the declining 50-day moving average. It went and made a lower low. And of course, you don't see the 50-day moving average there. I don't know why I didn't leave it on the chart. But anyways, this prior support had been acting as resistance. We saw the lower low. We saw it run up, make the higher low right in here, and then run for the top of this range, which it did. It pulled back, created another higher low, and then broke out through it. And that's kind of, the scenario we were looking at was that it had the potential perhaps, and it still does, to get up towards about that 58, 59 level. If we take a look again at the 240-minute chart, meaning each one of these candles represents 4 hours, we had seen, we had drawn in a shoulder here, a head right in here, and a shoulder, this being the neckline, and it broke that. So, I mean, you could look at it and say, well, the height of the pattern from 42 to 54 is 12 points, so we add that to 54, and that would give us an upward objective of 66. And that is the proper way to look at a head and shoulders pattern, that it would give us an upward objective of 66. The point I'm trying to make here, though, is that this prior resistance is likely to act as resistance once again. And don't get, locked in. Don't put your blinders on and say, well, the upward objective is $66 a share. Instead, look at it and say, you know what, it's behaving well right now, and we look at these higher lows. And last week we said that we wanted to put our stop under here if you were long oil. Now you want to put your stop under here if you're long oil. And now I would think that this prior resistance needs to hold a support. So you could put your stop at about 53.50 or so if it's going to continue to move higher. Defense is job number one, risk management. You don't want to get locked into a belief that it's going to continue higher, it has to continue higher, or anything like that. So that'll do it for now. One other one, I was going to take a look at Facebook, because we've been looking at this one in Alpha Trends, that we looked at it here and said, okay, that's good. It made the higher high, but it was too extended to buy right here. So we said, okay, it made that higher high, and let's look at this on a 10-minute time frame. It made the higher high here, but how did it get to that breakout point? It was extended when it got there, so we didn't want to purchase it. Instead, we put it on our watch and said, okay, good. It pulled back to the rising 5-day moving average. That's great. Now we want to buy the higher high, and that will confirm that the buyers have control, because it will have a higher low underneath it. So we were looking at it as a potential long, but it never triggered, so there's no reason to be long a stock like Facebook. By the way, I have a class coming up at Alpha Trends this week. There are 3 seats left. It hasn't been heavily promoted. Don't expect it to be. You can look at the details at alphatrends.net if you're interested. That's the only promotion I'll do for it.